Everybody else?
Senator Smith of Minnesota is recognized.
Thank you, Mr. Chair, and thanks to all of you for being here. I appreciate this very much. So Minnesota is home to about 300 community banks. I think it's about the highest concentration in the whole country. And these banks are small, but they're extremely important and really deeply rooted in their communities and mean a lot to the people and businesses who they serve. So I was really pleased to see the FDIC exclude banks with less than $5 billion in assets from their special assessment to replenish the Deposit Insurance Fund following the collapse of Silicon Valley Bank and Signature. Mr. Frazier, this question is to you. Can you just talk a bit about why it's important to make sure that smaller banks aren't burdened by this special assessment?
Yeah, thank you, Senator. And it depends on that burden. And I think you pointed out the $5 billion exemption on the special assessment. And I know a couple of mutual bankers in Minnesota, and one in Lake City. In fact, I had a discussion with the other day, and we were pleased to be excluded from the assessment because we didn't think we were involved or any of the root cause. But so it depends on where you sit.
Right.
But given that, I'm worried not about this exception, and I'm pleased to be excluded, as are all the other banks, but that are in our size. But I'm worried about the next event if we don't have any reform or think through how and when those special assessments are, and if it's a bigger event, will we all bear that burden? And earlier today, I talked about that responsibility we have as bankers to provide credit and to operate in a safe and sound way, and to protect our consumers and operate in a fair and reasonable way. That could be called in question a little bit if we don't think through what the next event's going to be.
Right. Thank you. I appreciate that. And it's complicated, right? Because we don't want to create a moral hazard where there's, everybody has like unlimited deposit insurance, and therefore, what the decisions that you make don't matter. Ms. DeVito, thank you for being here. It seems to me that Silicon Valley Bank and Signature Bank, they not only took big risks, but they treated risk management like a total afterthought, honestly. And that isn't how most small banks and community banks operate. So, the Deposit Insurance Fund assessments are based on risk, and that includes a consideration of a bank's supervisory rating. But the Fed and the FDIC reports on the failures of Silicon Valley Bank and Signature respectively found that supervisors were slow to downgrade ratings after deficiencies were identified. So can you talk about, does this mean that SVB and Signature contributed less to the Deposit Insurance Fund than they should have? And how important is it that you have strong, effective supervision to maintaining adequate funding of the Deposit Insurance Fund? How does that work together?
Thank you. I don't have the figures on SVB's contribution to the Deposit Insurance Fund specifically, but I think a lot of experts have been concerned for a while that banks are being underassessed. The Deposit Insurance Fund was below its statutory minimum going into this crisis. Mm-hmm. So I think there's some desire there to bring it up to a threshold that is a little bit more nimble to manage losses through crisis. That said, I think there could be ways to more progressively assess based on risk, including maybe going forward on concentrations of uninsured depositors. Those formulas tend to be very complicated, and I don't want to be overly prescriptive, but there are definitely ways to make sure that it's a more progressive assessment.
So you think that there could be room to restructure assessment rates and methods so that less risky institutions like small banks and community banks aren't paying more than their fair share?
Yes, ma'am. I think we need to look at concentrations of uninsured deposits and certainly overall systemic risk, and make sure that those scorecards that the FDIC uses are updated consistently and well.
Mr. Frazier, would you like to comment on that?
Yes, Senator. I think it's really important that risk management practices are embedded in any kind of assessment changes that may occur. I think bankers of all stripes want to pay their fair share in this. I mentioned earlier, we don't view deposit insurance as a tax or an expense, but as part of providing safe services to our community and having reinsurance. And I think that will be critical to the stability of the fund going forward.
Thank you very much. Thank you, Mr. Chair. I yield back.
Senator Warner is recognized from Virginia from his office.